Well, are the debasement trades back in vogue? I'm talking crypto, I'm talking gold, short US dollar, those various factors. We don't know, but we're looking to see if they can kick. Now, we've seen a concertina of various factors that have played through, but we've seen some massive moves playing through in various parts of the crypto sphere and also in gold as well, relative to what we've been seeing of late. Now, I think, first of all, let's have a look at the setups we've been seeing recently. We've seen this kind of coiled, tight ranges, this disagreement between market participants to really move prices around. And Bitcoin's traded in a tight range since early August of, 67,000 to 58,500. It's been a tight range. No one's really prepared to move that. Ethereum over in recent times, about 100-point range, 1,900 down to 1,800. And gold also last 6 sessions has been trading in that tight range. Now, what triggered the moves that we've seen? First of all, the fundamental news was that the US Treasury Department are increasing the size of their buybacks, specifically in the 10 to 30-year maturities playing through. It's a powerful statement to the market. It's not QE in any capacity. They're not increasing reserves to fund this. Net new money is not increasing. They're going to be funding this essentially from short-term borrowing through bills. So the government finances are not going to change in the back of this, but they're going to use those extra funds there to add liquidity into the long end of the curve, release funds off dealers' balance sheets, free up that, and give them a bit more confidence. And that will compress yields. Now, what happened at that point when we saw that announcement coming through? 10 and 30-year Treasury yields dropped about 10 basis points. The US dollar fell fairly sharply. And risk assets had a nice move. And that sort of saw Bitcoin, if we want to use that as a proxy, moving from around, 64,500, moved up to 6,500, 500. And it was on then. That's where we saw the liquidations coming through. This is where those people who are effectively short on leverage, started to get margin called, and we started seeing the move very, very strong up. And what we saw in that situation with that massive amount of positioning is about $1 billion worth of liquidations coming through the various leverage exchanges coming from crypto. And that's where we saw Ethereum up 20% from those lows. Massive moves there. We saw Bitcoin pushing into 70,000. We'll see if it breaks there as well. Or 200-day moving averages were being tested. Gold's had a strong move through that recent consolidation. So the question is this Treasury buyback really going to continue to see yields lower? It will continue to see the dollar push lower. And will this be the panacea then to continue to see a trending move going forward in some various cryptos going forward? And obviously, if you look at the liquidation side of things on various websites, you can see that there's a large amount of shorts which still need to be cut up should we break around 71,300 on Bitcoin. So more short positioning could still come out of the market, perpetuate that. People could chase this one. Is this really the panacea? I think this is all about positioning. We don't know as momentum traders. Let's see if this can run and trade with Pepperstone.